Why isn't it over? And what are the causes for the trouble spots that you see?
So, Joe, on a couple of notes there. I mean, one is just valuation. Tech is still, as a whole, extremely overvalued. And I think what you had is one of these, dead cat bounces. If you look at yesterday's action in the market, and I'm not a technician, I'm more of a fundamental analyst, but yesterday, it was, you didn't hit the 100-day average. You had more decliners than upside stocks in the broad market. So to us, it looked like this was just a relief rally in a sector that everybody wants to love. I still think there are a lot of stocks in there that you want to own, but they're selling, a lot of these stocks are selling at growth at any price, and you want to buy stocks at growth at a reasonable price. And to your point that we were just talking about, there are other parts of the economy that are improving now, and I think capital is going to be allocated to where there's more opportunity, and that's going to be in industrials, that's going to be in financials, that's going to be in a lot of reopening areas, not just the safe haven, we got to stay at home kind of stocks that have great cash flow.
And there's the fortunes of the companies that we see in the real economy, and then there's the price of the stock, which, as you said, depends on a lot of different factors. You mentioned what are you paying for those earnings, and that is related to interest rates. So that's been, front and center, whatever your viewpoint is
right
on where interest rates go. So what is your view? At the same time that David Tepper was saying, Japan's going to start buying because now bonds are cheaper in the U.S. They can get a nice yield in Japan. Now, at the same time, I was hearing from other people that said the GDP growth during reopening could be 10%. How can we expect to keep rates down below 2% if GDP is growing at 10?
Absolutely. And I think when you look at it, yes, you could have a pause in the 10-year about 1.5 to 1.6. But going forward, you're going to see a lot more pressure on interest rates because growth is coming back. Demand is coming back. So many of the problems that we're having today are supply issues. And when supply issues get rectified and you see pricing, and you're seeing that in semiconductors, that means demand in autos is improving. You're seeing it in supply chain for home products. And as more people go out for restaurants, hotels, travel, those can all lead to inflationary pressure, especially as demand increases globally and as the vaccines get rolled out. I think you're going to see these fits and starts where interest rates might level off at 1.5, but as they increase, your discount rate for these technology stocks gets higher and higher. But more so, Joe, there's opportunity in financials. There's opportunity in companies like American Express. Those companies can do well. Morgan Stanley can do well. But at the same time, you can stick with technology. And I think having a broad-based, diversified portfolio at this point, as opposed to just focus on, hey, these is one key area that's almost 30% of the S&P, that I think going forward will serve you well because the opportunity today, I think, is in a lot of different areas and globally as well as the economies of the world pick up.
Sarat, it's not a slam dunk that stocks go down when interest rates go up. In fact, a lot of people have pointed out historically some of the biggest moves in the stock market have been made as interest rates are increasing. Just depends on maybe there's a level where they get too high. What do you make of what's happening with GameStop? It's happening again. It's happening again. Did you see it today? It's almost
So yeah, no, it's up to, and to your point, I absolutely agree, Joe, and I am, bullish longer term on the stock market. I just think you have to be at the right areas because the S&P index might not go up, but your sectors and stock allocation and pick could be better. GameStop, here we go again, right? It's an interesting play. You're seeing some of these stocks in the Reddit world, and I think again that's a different area. That's not in the core long-term investing. That's the more short-term trading mentality where they could be a couple of catalysts, but I think the opportunity there is long-term investing in other areas of the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.